Credit System Overhaul, 5 AI-driven changes you must know. Hidden Credit Rules of 2026. How AI now controls approvals. Unknown banking shifts that freeze accounts. What changed in 2026? Secret FICO 10T impact. Why high scores no longer guarantee approval. Summary. In 2026, the credit system changed fundamentally. Artificial intelligence and new scoring methods now drive many lending and banking decisions. Lenders are more selective. Credit scores alone no longer secure approvals. Underwriters and automated systems evaluate broader financial behavior, spending patterns, credit usage, and balance trends. Credit utilization is being scrutinized more tightly. Reported balances, even moderate utilization, can trigger denials because trending high balances signal potential inability to repay. Banks use AI to monitor accounts. AI systems analyze deposits, withdrawals, transfer behavior, and counterparty patterns. This has led to unexpected account freezes, locked funds, and closures flagged as fraud, sometimes without timely remediation. Business accounts face especially weak regulatory protections. AI now makes credit decisions routinely. Human underwriters are rarer, reducing contextual review and second chances. Automated models act on patterns rather than single snapshot metrics. FICO 10T adoption is accelerating. It uses trending data over time, direction of balances, payment trajectories, so short-term improvements no longer override negative behavioral trends. Practical implications and recommended actions. Maintain consistently low utilization. Aim for zero interest-bearing balances. Avoid frequent or random credit applications. Monitor full credit profiles, not just scores, and address negative items, collections, charge-offs, bankruptcies, promptly, because AI and trending scores will increasingly penalize persistent negative behaviors.